Hello listeners, my name is Charles Scott. The program in which you are going to listen to is called Can We Talk? Eldridge Gloria Brown is not here today. She's out on the road and she's got quite a few projects that she's working on, so I want to give a shout out to her. I miss her being here today, but she said that she's going to be here soon. She's got a lot of new information and a lot of new items that she's going to be discussing with you. So with that said, today we are going to talk about a continuation of what we spoke to you about last week, and that was how to get a mortgage, how to get yourself into that particular home. As you know, I am in real estate. I am the broker and the owner of Tri-State Realty, and there's a lot of momentum going on out there right now. A lot of people are coming in, a lot of people are purchasing homes, and the biggest question that I get is, what do I have to do? How do I get into that house? A lot of people right now are finding out that the cost of renting has skyrocketed, and we don't expect it to go down any. We expect the rents to continue to go higher. You may say, what's going on? What's happening? Well, there's a law of supply and demand. There's not a lot of apartments that are out there, and in the last, I'd say, 5 years, there hasn't been too much building going on. It's like what you call a perfect storm in real estate of things that you don't want to happen if you want rents to stay low. First of all, we had the COVID, and which is still here, and that has stopped a lot of properties from being built. There's a shortage of land out there, so look, when you look behind me right now, you see that huge city there. Now, where that's at, as you know, this is a studio, so we can put backgrounds in the background, but look at all of that real estate back there. Where do you find land? Where do you find open land? And this is true in cities. You have a twofold problem. In the cities, you don't have a lot of land. So land is scarce, and land that comes available, developers usually want to buy it and build a high rise and put a lot of homes on that one particular piece of land. Then when you get out into the suburbs, the cost of building is even more expensive because they want the different zoning rules. The zoning wants maybe a half an acre. You cannot just go out there and build a house wherever you feel like it, because you have to have enough land in order to build that particular house. So you have a perfect storm of not being able to get the land. Then the cost of lumber. Cost of lumber has gone up 4 times in the last couple of years, and now it's come down a little bit, but the cost of lumber is very expensive. Then add to that labor. Right now it's increasingly hard to find people that are experienced, to find carpenters, electricians, plumbers. These people are very busy, so it's hard to find them, much less the cost of hiring them. So with all of these things being said, you now know why the rents have gone up a lot. And a lot of people have, decided to try and go out there and find that house. Last week I talked about some of the things needed to buy a house, and I'm just going to recap that because sometimes people tend to forget or they need a reminder. There's mainly 4 things that you need to know when you're looking to purchase a house. One, you need income, so you need to be on the job 2 years. 2 years on the job, or at least have 2 years of the same occupation. So if you were, let's say, a nurse and you worked at one hospital for 6 months and you worked at another hospital for a year and a half, as long as the total equals 2 years, then you're okay. And the income determines how big a house you buy. The bank will not give you more money than you can afford to pay them back. So if you have a small income, you may qualify for a small mortgage. But then you have a challenge. How do you go out and find a house with a small amount of income or small qualification? That makes it difficult. So a lot of times people get excited, they get pre-qualified for a mortgage, but if you're only getting qualified for, let's say, $150,000, $150,000, and your expectations are to buy a house for $250,000, $300,000, sure, you have a pre-qualification, but remember, you can't go over the amount of money that the bank is going to give you. So You sometimes maybe have to join up with another partner, maybe a friend, maybe a husband, wife, boyfriend, girlfriend, mother, father. If you double the income, then you can double the amount of your qualification. So try to get as much income coming in as you possibly can in order to be able to purchase that particular house. The other thing they look at is how many bills you have. Remember, if you have a lot of bills, that's going to keep you from being able to get qualified for a mortgage, or you may not be able to get the big house that you want, because they're going to be able to look at how many bills you have. That's called your debt. And they have a thing called debt to income ratio. They look at your debt and they look at your income. So if you have a lot of money coming in, but you have a lot of bills going out, then you're still going to have a difficult time being able to purchase a property because of all the bills that you have. Now, you can cut down on your bills by basically maybe paying some of them off, maybe refinancing some of the bills, maybe selling some of the high-ticket items like a car or whatever it may be to cut down on the debt. So you want to keep your bills as low as possible when you're looking to buy a house. The other thing that they look at is, credit. Most of the time, they're looking for a credit score of around 620 or higher. The higher your credit score, the better off you are. 620 would be like around the minimum. Then you could go 640. 700 is ideal. If you can get a credit score over 700, then that would be ideal. And remember, they don't use just one credit reporting agency. They look at all three of them. They look at TransUnion, Equifax, and they look at Experian. So all three of your credit reports, that's what they review. Sometimes you may have something on one credit report and it may not be on the other credit report. That's because whoever you borrow the money from, they don't use all of the three credit reporting bureaus. So, but when you go to get a mortgage or you go to the bank, they're going to look at all three of your credit reports. So it's very important that you check out your credit and that you check to make sure that your score is up there. Again, they're looking for around 620, 640, 670, 700 is even better. The higher you go, the better off it is for you. The other thing that affects your credit score is the student loans. I can't tell you how many times people have student loans, and the student loans will affect whether or not you can get a mortgage. One of the new things that has happened, though, is that they don't count student loans, the whole amount of the student loan when you're getting a mortgage. It depends on the bank. They used to count like 1 1/4. They used to take the student loan and multiply it times 1 1/4, and they would consider that to be your payment. Now, in some cases, instead of, so if you had a student loan, let's say around $100,000, then they would figure your payment on that student loan would be about $1,025 a month, somewhere around there. Now what they've done is they have reduced that to like 0.5. So that means that your student loan could be as little as like $500 a month. So if you have a student loan, it's not as bad as it used to be. So that's a good thing. Student loans have sort of been reduced in the amount that they qualify you for. If you did not qualify in the past, you maybe want to come back and start all over again and revisit that. And try and even if your student loan is in deferment, a lot of times people have a student loan, they may say, well, I'm not making payments on the student loan right now. Well, it's good that you're not making payments on the student loan. Maybe you're trying to save up some money, but they're still going to count that as a payment because they know you have to pay it eventually anyway. So you have to come up and you have to pay the student loan. Now, one of the things that we didn't talk about last week was interest rates. Interest rates have a big bearing on what type of payment you're going to have. The interest rates right now are low. You have interest rates of around probably 3.78, maybe 4%. Interest rates were down to about 2.25, 2.5, but all of those rates are still low. When I started Selling real estate, interest rates were around 14, 15%. So imagine that. Can you imagine getting a mortgage and the interest rates were that high? Naturally, the payments were lower, but the interest rates were very high at that particular time. So interest rates now are low. So you want to take advantage of getting a mortgage now. That's why I tell people, if you're looking to get a mortgage, now is the time to come in there and get that mortgage, because interest rates are going to go up. It can't help but go up because the economy is starting to pick up. They're starting to be concerned about inflation. And when inflation starts to kick in, then what happens is they try to bring it down by raising the interest rates. So if you're looking to purchase a home, and if you have the ability, or you're looking to put it off, I'd suggest if there's anything you can do to expedite it, now would be the time for you to purchase that home, because the interest rates are going to go up. And when the interest rates go up, that means you qualify for less and less of a mortgage. So try and get out there now, get the money together, or either pay off some of your bills or increase your credit score, because the interest rates are going to go higher and it'll make your chances less. The interest rates, again, are different from bank to bank, and you may find even programs that can assist you in purchasing a home. Some of the banks have first-time home buyer programs. So if you've never purchased a house before, you may qualify for a first-time home buyer program. The first-time home buyer programs, what they do is they may be able to assist you with some of your closing costs. And the closing costs, that's the lawyer, that's the insurance, that's the appraisal. See, when you're buying a house, there's other things other than just the down payment. And the closing costs are some of the things, that's some of the money that you need. And remember, if you have enough money for your down payment, and if you have enough money for your closing costs, you're that much better off to be able to purchase a home. So try and save up or put together as much money as you possibly can, because you're in a better position. So again, as I said, the interest rates determine how much of the mortgage payment you're going to be making back to the bank. When you're paying back a mortgage, you pay two things to the bank. That's the principal and the interest. The bank gets to keep the principal and the interest. So the principal, that's the amount that you owe. That's the base amount you owe. So if, for example, if you borrow $100,000, you're paying back payments every month, and it's coming off that $100,000. That's called principal. In addition to that, the bank is charging you interest to loan you that money. Now, a lot of times people complain and they say, I made my monthly payment and it looks like nothing came off the mortgage. That's because when you first start off with a mortgage, almost 95% of the mortgage is interest in the first earlier stages of the mortgage. After a while, that turns around and more money goes towards the principal and less goes towards the interest. But when you're first starting off with a mortgage, a lot of it is just interest because you owe so much. But you also got to realize it's set so that it's paid off in 30 years. So how can you cut your mortgage in half, or cut the amount of time you pay your mortgage in half almost? Put more money towards the principal. Now, that's another topic in itself. I could spend the whole program on showing you how you could use the same amount of money and putting more towards the principal so that you don't have to pay as long for your mortgage. And you can cut down and save yourself a lot of money. Whenever you get your mortgage statement, you look on the bill and it'll say principal, interest, taxes, and insurance. Then it shows your total mortgage payment. There's also one more line, very important line, and that line will say additional principal. So if you want to put another $50 a month or another $100 a month towards your mortgage payment, you can cut off almost 13 years off of your mortgage so that your mortgage will be paid up a lot quicker, therefore saving you a lot of money. So you don't have to, even though the bank will give you a mortgage and you have 30 years to pay off that mortgage, you don't have to take 30 years to pay it off. You could put extra money towards the principal, and before you know it, 13 years, cut off your mortgage, and your mortgage is paid off, paid in full. You still have to pay your taxes and your insurance, but you will pay off your mortgage a lot quicker. So, like I said, that's another program that I can talk about in the future, showing you if you do in fact have a mortgage, how you can pay it off a lot quicker and save yourself a lot of money. That's one of the things that we will definitely talk about. So now, let's say you do get pre-qualified for a house. You got to decide what type of house do you want. There's different types of homes. There's a single family house, there's a condo, there's a co-op, there's a 2-family, a 3-family, a half duplex. So you see there's all sizes and shapes of houses out there. And you've got to determine what's in your best interest and also what you can afford. And also, psychologically, what you can bear in dealing with the tenants or the people living in the house along with you. Because it's not as simple as you look on a piece of paper and say, oh, I have some people come in, oh, I want a 2-family house, I want a 3-family house. And I say, okay, have you ever dealt with managing people? Have you ever dealt with dealing people? What is your tolerance for dealing with tenants or dealing with, you got to be sort of compassionate in dealing with the tenants. You got to understand problems. You got to become a family member almost. You got to deal with situations, especially if you're going to get a 3-family. You got to negotiate between the tenants. You got to come home after you're tired and you've been working all day, and you come home and you live on the first floor, and you come in and you, just as you get in the house, here comes the tenant from the first floor. First floor tenant's upset because the second floor tenant parked in the driveway, and first floor tenant couldn't get up and get to work on time. He's complaining about the car parked in the driveway. They parked the car on the side here and I had to get around it. So now what do? Also, maybe it was garbage day and you got 3 garbage cans out there, and all of a sudden the first floor tenant said the second floor tenant's, or the second floor tenant saying the third floor tenant's putting garbage in his garbage can and he's not going to take it out to the curb because that's not his garbage. What do? So now you got children on the 3rd floor, and the people on the 1st floor, they work on the 1st shift, and all night long they have children upstairs who are running across the floor, and the second floor tenant couldn't get to sleep, and so the second floor tenant's complaining about 3rd floor tenant. What do? So you see, you're going to have to deal with situations, and I don't care how good you know the people, and sometimes if they're your relatives, that's even worse, because now they feel as though, well, you know, you definitely got to take care of them because they're your blood relatives or cousin, your nephew, or whoever it may be. And so now you become an arbitrator. You got to be the person, you got to be the good guy, bad guy, arbitrate everything, arbitrate all of the feuds, because now at the end of the month, guess what? You can't avoid them. You got to go collect the rent. So now you got your hand out for the rent. They're looking at you, well, you didn't take care of my problem, this and that and everything. And so this is what happens when you got a 2-family and you got a 3-family. There's a management that comes with that. You got to be a people's person. You got to treat people really nice. You got to take care of the repairs. What happens when the toilet gets clogged up? What happens when the sink gets clogged up? You know, what happens when there's a broken window and the kids playing in the backyard claims, I didn't do it, he did it, she did it, who broke the window? And you have in the lease, well, the tenant is responsible for any repairs that they cause. Suppose they didn't cause it. Someone threw a baseball and went through the window. So now, oh, you got to replace the window. Now you go to replace the window, guess what? They don't have that size in the shop. They got to order it. So now you got to wait a week, 2 weeks to get the window in. So now you got to go up and you got to patch up the window. Now the window doesn't come in on time. Tenant wants to know, what's taking you so long? How come the window's not fixed? So you see, asking me, how do I know all these things? Because I've had a lot of multifamilies, and I've had a lot of tenants. And I know when you have these situations, you have to take care of the people, you got to treat them good. And there's a lot of hours and sleepless nights, because in the middle of the night, the tenant may call you about something that's going on. You know, you may have an apartment building next to the woods. And you know, in the wintertime, mice get cold. They want to come inside too. So it might have a mice come, and it could be the people could be the neatest people in the world, and the mouse could come flying in the house, and all of a sudden, oh, everything goes crazy. Call the landlord. Now you're up chasing a mouse or something like that. So you see, that's what happens when you have a multi. It doesn't go 100% as you think it would be. So you can put down on paper, okay, this is my mortgage payment. This is how much my taxes and my insurance. And I'm going to collect rent from the 2 tenants. And so the 2 tenants are going to help me make my mortgage payment. Or 1 tenant's going to help me make my mortgage payment. But you got to factor into the stress and the work and the time and the effort. You're getting paid for what you're doing by them paying the rent. And don't get them upset and they don't pay you the rent, because you are still going to make the mortgage payment out of your pocket. And so therefore it has to get paid. These are just some things that you have to consider when you're buying a 2-family. And a 3-family, like I said, is not twice as much work. It's 4 times as work. Because with a 3-family, things just sort of like really boomerang. And if you're looking to buy a multi-family, a big one, like a 4-family, then you got 5 times the work. You might as well become a full-time manager. Speaking of that, I do not encourage you to go out and hire a management company, because the management company is only concerned about really one thing: collecting money. The people's problem and all of that is still going to be there, and the management company does not have time to go out and appease the tenants and keep them happy and keep them loving you. Their concern is just collecting that rent. So they're still going to come to you with all the problems, and probably even more so, because the management company is not going to really take the delicate care that you would. So I would suggest you try and manage your own properties in order to make it work out properly. So that's a multifamily. Single family, a lot easier. Sure, you don't get the other tenant. Sure, you don't get the extra income. But you come home from work, you're tired, you open the door, you come in, turn on the TV. It's peaceful, it's quiet, go out in the patio, smell the flowers. It's your home, so you can have a lot more relaxation, probably add more years to your life, because you're not concerned about people calling you up in the middle of the night and all of the hassles and all of the issues. So with a single family, it makes it a lot easier than if you had a multifamily. Now, what about a duplex? A duplex is fairly good too, because with a duplex, you live on one side, the tenant lives on the other side. And you have upstairs and downstairs, you have a townhouse, so you really don't hear the tenant on the other side. Most duplexes, they have what they call a firewall. That's a brick wall in between the duplex. So it's pretty, soundproof. The other people on the other side, they have their own driveway. You have your driveway. You have a backyard, which is split up. You have your side of the backyard with a fence, they have their side. And it's fairly easy to manage, easy to take care of, cut the grass, maintain. And it's better than having upstairs and downstairs in a 2-family, because upstairs in 2-family, you hear people walking around up there all hours of the night, possibly. People running up and down the steps, and every time you're trying to get to sleep, you hear them running up and down, and you get mad. And so when you have a duplex, you live on one side, the tenants live on the other side. So it makes it a lot easier having a duplex than having a 2-family house where you have tenants upstairs and you have the tenants downstairs. And also you have your own porch, you have your own backyard. If you have a 2-family and you live up on the 2nd floor and you have a porch, well, your 1st floor tenant has use of the porch most of the time. And the downstairs patio area, the 1st floor is usually down there. So, and then you have a driveway. So you may get up and have to have the tenant move the car in the driveway, or you got to move your car for them to get into the back of the yard, because you have that one driveway. With a duplex, Each side has its own driveway. And why do I say that? Because those little things mean a lot, believe it or not. The biggest problems I used to get a lot of times was driveways, people blocking the other person from coming in, and then guests. The guests, instead of the guests parking on the street, the guests pull right into the parking lot and in the driveway and run in to talk to the people. Oh, and then you're blowing the horn. Oh, I'm only going to be a minute. Hold on just a minute. I'm only going to be a minute. That minute turns into a half an hour. And if you don't even tell them you have to move, that is an hour and the car sitting in the driveway. So you pull in from work and boom, there's a car sitting in the driveway. Now you go and you knock on the door, trying to be nice. Can you please move the car? No cars in the driveway. Now that person looks at you like you're crazy, ready to start an argument with you. That person doesn't even live there. They don't pay any rent. But they're looking at you like, why do I have to move? Can't you park on the street? I'm like, you're the landlord. So you may laugh when you hear these things, but I'm telling you from experience, and these are the things that happen when you have a multifamily house. Now, the other type of house is a condo. Maybe you don't have a large family. Maybe you're in transition and you're moving from one place to the other. Or maybe you're single and maybe you just want to save some money. Maybe you want to save money to get the bigger house, but in the meantime, you don't want to rent. So you buy yourself a condo. And with the condo, you can have a 2-bedroom, a 3-bedroom condo. There's not too many 3-bedroom condos because condos are meant for large families. That when you have 3-bedroom, and large families really don't sit well in a condo because it's not situated to have a lot of children in a condo. It's mostly a 2-bedroom unit. Either one child, 2 children, or either, just yourself. So condos have condo fees though, remember that. In addition to all your mortgage and all the other things, you got to pay the association maybe $200 to $300, $400 a month for them to cut the grass and do all the other things. So remember, that's what happens with the condo. So hopefully today, you might rethink about whether or not you want to be a landlord, or you might want to rethink about maybe you want to buy a single family house. Or if you have no children and you just want a peace and quiet and you don't want to do any maintenance, cut any grass or shovel the snow, maybe a condo is good for you. So with that, I'd like to say hopefully today I gave you some information that you can think about in your home buying endeavors. And again, my name is Charles Scott. I'm the broker for Tri-State Realty, and hopefully that information today can help you and you will tell your friends. And with that, until next week, God bless and shalom. Thank you.